Have you been wanting to improve your credit, or are you just beginning the journey on building credit? Then this video is for you. My name is Sawyer Silverhorn, and in this video I want to talk to you about what credit is, things that you can do to improve it, and tips of things that you should avoid. I want to talk to you about the most important aspects of personal finance, which is building credit. By the end of this video, I will hope that you take away some valuable strategies and information to effectively build and grow your credit. So before we get into it, it's important to know simply what credit is and why it's important. Credit is simply a line of credit or a loan that is extended to you by financial institutions, such as banks or credit card companies, credit unions, etc. And as we know and have heard, credit is extremely important because it affects getting loans, it affects getting jobs, it affects getting credit cards, interest rate on your home, so on and so forth. The list goes on. Having good credit can get you a lower interest rate on credit cards, loans, your home, cars. On the other side of the token, having poor credit, your interest rate will be higher. Thus, your payment will be higher. So how is your credit score calculated? So your score is calculated based on your length of credit, your payment history, your credit utilization, types of credit, and recent inquiries. If you are just starting out or have little to no credit, the faster you can begin to establish credit, the better you'll be. So if you're trying to establish credit for the first time, here's what you can do. One of the best things that you can do, and this is simply what I did at 18, was get a secured credit card through your bank or your credit union. A secured credit card requires a deposit, and they use that as collateral. And this serves as your credit limit. By making payments on time, keeping your balance low, that'll slowly help you build your credit. Another great way to build your credit is becoming authorized on somebody else's account. So for instance, most of my credit cards, I have a Chase card, but my wife is also an established user for that account. So while it's building my credit, it is also affecting her credit. So while the primary member of the account, which would be me, makes the payments on time and keeps the balance low, all that goes over to the secondary and it shows on their credit report and their history that they can do so as well. So it helps them in return and builds their credit. Finally, just getting started, you could co-sign for a loan. Now obviously you only want to do this with somebody that you trust. I'm not saying go out and hop on somebody else's loan, because that could end very badly. But simply, as I was saying earlier, my wife, for instance, all loans that I get, say a car loan, she is also on that loan. So all the payments are establishing and helping her credit as well. So now that you've established some sort of credit, it's time to build and improve your credit score. There are several strategies that you can use to do this. First and foremost, this one should be obvious, but make all your payments on time. Or simply, if it's easier for you, you can schedule all your bills either for the day that they're due, or you can do them earlier, whatever works best for you. Paying on your monthly debt on time is one of the best ways to build your credit score. The next key factor in building your credit score is keeping the utilization down. And what I mean by this is if you have a $10,000 credit limit and you're using $9,000 of it, your credit card utilization will be 90%. When you're getting a home loan or things such as that, they look at that and say, okay, is his debt, at a 30 or 45% utilization rate? By keeping your credit card utilization low, that shows the credit card companies that you're responsible with the money and that you pay them right back. Obviously, if you have a $10,000 credit card and there's $10,000 on it, you're maxed out, that will lower your credit score. The third thing is if you go out and apply for 6 different credit cards, all of those hits are going to affect your credit score. When you open up new lines of credit, it takes a small hit on your credit score. And it'll also lower your average lifetime of credit that you have had. So once you have the secure credit card, you're starting to build credit, then you want to say go and open up one at Directions. So you apply for Directions, you get the card that will hit your credit score, that you opened a new account, but that'll show better and reflect better on you versus trying and attempting to get 6 different credit cards. And keep in mind, every single credit line that you have, the length of time that you have them, it averages out, and that also shows up on your credit report. So when you get into building credit, obviously that time's going to be pretty low, but over time when you show that this person has an average lifetime of say 10 years of having credit, and he's been able to maintain that, that's a very positive thing against your credit score. Now, once you have done all the steps I previously mentioned, you want to make sure you monitor your credit score regularly. I have seen so many people put all their credit cards away, they don't even use them, and say, some fraudulent activity happens on their account that they don't know about. Next thing you know, they're not paying the payment, even though they didn't make it, it's still showing up on their credit report. They didn't make it, it comes in as a late payment, and it affects them. So you want to make sure you stay on top of your credit report Constantly monitor that so you can dispute anything that's, say, not yours, or if there's any issues on there. Another one I've seen is, say you have an annual membership somewhere and you stop using the card, and 8 months later that card will then get a reoccurring charge on that. Maybe you forgot about it. So just something to keep track of and something to keep in the back of your mind, because that's the last thing you want, is to be maintaining good credit and you get a $20 annual membership fee, and next thing you know, it dings your credit because you don't pay it. So if you do find an error on your report, you want to report them to the agency immediately. Your credit report is your lifeline. One of the joys of being an adult, we have to get cars, houses, loans, credit cards, so on and so forth, and that number puts everything together and shows whether you are responsible enough to have that credit limit available to you. Here are credit mistakes to avoid. So when you have credit cards, you can do things such as take a cash advance. A cash advance comes with very high fees and a very high interest rate. And this can quickly raise your debt utilization, which in turn can affect your credit score. Another mistake to avoid is closing accounts. Just because you don't use a credit card does not mean you should close that account. Every so often you'll see accounts that'll close automatically. For instance, I had a Kay Jewelers account, and I didn't use it for years, so they closed automatically. Did it affect me very much? No, not necessarily. Credit card companies such as Chase, Discover, most of the time they won't close your account. If anything, they'll increase your credit availability. So like I said, if you don't use a credit card, do not close the account. It'll shorten your credit card history. It'll lower the amount of credit that is offered to you, which will in return raise your utilization rate. And last but not least, I know I previously mentioned this before, but do not hop on somebody else's loan with them if you know or are cautious that they cannot make those payments. If they miss or fail to make a payment, that comes back on you. So building and maintaining credit is crucial for your financial well-being. By following all the steps that I've mentioned in this video, I promise you'll be on the right track to building your credit score. So once you build your credit, you'll understand that you can use it to help you with other things. I'm sure you've heard not all debt is bad debt. So, say you want to get into rental properties, you can utilize that debt to get those houses, get renters in there, and you're making income. Yes, you're showing that you have debt on your credit score, but because your history, it's not going to affect you as bad. So thank you for watching this video. Drop a comment below with any questions that you may have. I can't wait for you to begin your credit building journey. I hope you found all of this information helpful. Please don't forget to like and subscribe to the channel, and I'll see you in the next one.